Hello there. This is James, and you're watching OneRoyal, and it's live, but not just OneRoyal, and it's live. No, no, no. You're watching OneRoyal live, doing a watch along of the main economic event happening in this very short trading week, which of course the NFP. So to every single one of you, happy NFP Day. But before we get started, don't forget these little broadcasts are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research, do your own due diligence, and of course, know the risks at hand before entering any trade. With that out of the way, let's get started. So, I've got a couple of little questions here. This is nice. Hi, all. Hello there. And hey, hey, you handsome man. Hello, little man. Hey to you too. Yeah. Again, as you gather, this is a live show. So, of course, if you're watching me on YouTube, you can ask me questions anytime you like, interact with me, say stuff long as we keep it clean because it's a family show, folks. But yeah, you could ask me, anything. It's the whole point. It's live. We're supposed to be able to have a chat and talk to each other, etc. But anyway, moving on to the case in point. Today, of course, we have the US non-farm payroll, which of course is going to be actually for June. Okay. Now, those who are new to trading might not know what the non-farm payroll is and why it is so important. Let me give you a brief explanation why this is a key event and why the market tends to get very excited about it. Well, it is released by the US Bureau of Labor Statistics. The non-farm payroll, NFP, presents the number of new jobs created the previous month, not including farm workers, hence the title non-farm. Yeah, I got another question here. This is great. Keep the questions coming. How do you think today's NFP will affect the market and especially gold? A gold trader after my own heart. We will have a chat about that in a little while. So, great question. Give me a while and I'll come right back to that. So, like I say, it is the number of new jobs created, not including farm workers, hence the title non-farm payroll. Now, a high reading is potentially seen as bullish for the US dollar, so potentially good for the greenback, whereas a lower reading is potentially seen as bearish for the greenback. It makes sense if you think about it this way. If you have a growing job market, then obviously your economy is growing, which obviously means your currency potentially is going to get stronger. So this is why it's a big deal. And it used to be a really big deal for Forex traders. Oh, hello. I've got another comment there. Hi. Hello there. Thank you for joining. Hope you're good. And it used to be a really big deal, and especially used to be a big deal for Forex traders. It used to cause an awful lot of volatility in the market. It really did. We used to have a big event to get it created for it. But it's not so massive as it used to be, but it still can cause quite a fair bit of volatility in the market, in particularly for currencies. And as that gentleman asked about gold, which we would talk about in a little while. But let's get into what the expectation is for the number today. How many new jobs is expected for the NFP to show? Now, the expectation today for the NFP is for the number to come in 115,000 new jobs. Now, the previous reading was 172,000. So, and that was a shocker. We weren't expecting that. We weren't expecting it that high. So 115. And this is the thing, the NFP is well known for creating surprises, so to speak. And here's the big question the market will be asking. in general. How solid is the current labor market? Clearly, we've had some good numbers previously over the last couple of months, but how solid is the job market currently? Because in general, like I said, we had 172,000 the previous reading. However, there is a little bit of worrying information coming in, and that is the fact that the percentage of consumers back in May saying jobs are hard to get rose by 22.5% in May. Now, that is in fact the highest percentage since January 2021, where back in January 2021, it was 22.8%. As well as that, the population out of work for more than 27 weeks also rose in May. So the question obviously we need to ask is, how is that going to affect today's NFP? If more and more people are finding it difficult to find work and people are out of work for longer, then how strong is this number going to actually be? And how solid in reality is the US labor market? And there's another thing which the market is going to be looking at very, very closely on this. Okay. And that is obviously how this number potentially can impact the Fed. Because at the end of the day, we got a new Fed chair, we got a new big guy in the big seat. And let's face it, in his first press conference and what he has said over several speeches since, he is extremely hawkish. And he doubles down on this. In fact, just the other day, he did a speech and he talked about this. He doubles down on the fact that the Fed's inflation target is 2%. Okay, this is what he had to say the other day. If there were people in households, all the business sector, all the financial markets who thought that this central bank was going to be comfortable with inflation above the objective, above 2%, they are going to be very disappointed. We are going to deliver price stability in the United States. So these are very hawkish comments. Very hawkish comments. Don't forget, inflation is like the highest it has been in several years. So for them to bring down inflation, they have to, increase interest rates to do so. And this is why this job number is important, because if we have a strong job number, then it obviously gives them confidence that the economy can handle higher interest rates. So if you wind the clocks back to last year, we were all talking about them cutting rates. Now it's the reverse. I mean, in fact, the CME Fed Watch tool prices in a 35% probability. Doesn't seem like a high percentage, but it's pretty high probability of a 25 basis point increase in interest rates as early as this month. Okay, here's another great question. Hey, James, what is the difference between hawkish, bullish, dovish, and bearish? The animal kingdoms of the market. Very good point. I'll definitely answer that question in a moment. I love that question. Let me just finish my point about the Fed, and then we'll talk about it. And like I say, and they've even said like the probability of having at least 2 rate cuts this year is around 40% by the end of 2026. So again, total change of voice. And we have to be interested. This is why this number is going to be interesting. We'll go back and answer those questions in a moment. But let's just finish what we're talking about with this. So like I say, we have had quite a stable job market up until now. Obviously, 160 minus 156, which was shocker. March 185, April 115. Like I said, we had 172 last month, as well as the NFP, of course. Don't forget, it's not just the NFP. Okay, today we have average earnings month on month, average earnings year on year, and unemployment, which is expected to stay stay around 4.3%. Anywho, we've got some great questions. Let's get to those questions. First of all, let's go to the questions. Let's talk about this one, which we've just been discussing, which is a great question. Hey, James, what is the difference between hawkish, bullish, dovish, and bearish? The animals of, I'm just making sure I've got time as well, the animals of the animal kingdom, of the markets. Right. Hawkish is a central banker who's considered aggressive, as in they're optimistic about the economy, that the economy is strong, and they're willing to raise interest rates. Bullish is somebody who believes an asset or the market is going to go up in direction. The reason why it's called a bull is because when bulls attack, they attack their horns up. A dovish, it refers to a central banker who talks about the market in a bit more of a sheepish way, a bit more nervous about the market, drop hints of cutting rates. That's what a dovish is. And bearish is the opposite of bullish. Bearish is somebody who believes the market or an asset is going to go down. And the reason why they've called that, is because when bears attack, they do it like this. But a great question. Okay, there was another question here as well. Let's go back to how will the NFP affect gold? Do you know what? This is a perfect time to bring gold up and have a look at gold. Absolutely perfect time for that. Let's bring up gold. There we go. Okay. There we go. Right. Gold's been a funny one over the last couple of days because obviously, the issue we've had with gold over the last couple of trading sessions is bond yields are rising because obviously we've had a very strong US dollar, which has greatly weakened gold. But gold clearly now has found a pretty stable, strong support around 4,000. If we get potentially a strong NFP, then of course it will potentially back up the argument that the Fed will raise interest rates, which means bond yields will go up, which means gold will struggle. Because don't forget, when bond yields are rising, smart money moves their money out of gold into bonds because the bond yields pays interest, whereas gold doesn't. So this is that. So potentially, if we get a good number, gold could potentially suffer. However, we get a bad number, potentially gold could survive the day. Well, because it will survive, but favor quite well. But that's quite a really good, very good question. Any more questions at all? Because how long we got? Oh, we got 1 minute. Crumbs. Actually, we run out of time. Let's quickly go through scenarios. Potential scenario number 1, S&P higher than expected, USD gains strength. And that's lower than expected. USA falls under pressure and the market rejoices. And then next, we got potential scenario number 3. NFP comes in as expected. The market's lukewarm to the announcement. That does happen as well. And potential scenario number 4, NFP is eclipsed by other job data. So those are our potentials. So how long we've got? We've got 10 seconds, everybody. 10 seconds. 10 seconds. We're going to keep an eye on gold in particular. Let's see how we do. And the number is whoa, 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 whoa. See, gold has sparked a little higher up. And the reason for that is breaking news. NFP is announced lower than expected. Lower than expected. Reason being for that is the job numbers come in at 57,000. Don't forget, the expectation was between 110,000, 115,000. It's come in at 57,000. So a lot lower. So clearly, those people struggling for work in May, clearly has had an impact on that. As well as that, other data coming in as well. We've got as well unemployment 4.2% as well, so slightly lower than 4.3. Average earnings, as expected, 3.5 year on year and 0.3. But the big number, of course, is that 57,000, lower than expected, and that's why we're seeing gold on the move right now. So breaking news, NFP announced lower than expected. Now a comment here. I love gold. Yes, of course I do. Everybody knows I love gold. It is my favorite. But let's have a quick look at some other assets, how everything else is reacted. Let's have a look at the euro. Look at that. Lovely move on the euro. Cable, British pound, US dollar. Again, nice move on that. This is going to be an interesting pair, the dollar yen, because don't forget the BOJ looks like they intervened today because obviously the yen is like around a 40-year low against the greenback. Yeah, I see the dollar has fallen a little bit as well on that. But really, I think the exciting move is gold here, because where were we at the beginning? Yes, we've moved nearly a good $40 up on the back of that result, which is very, very good indeed. So like I say, indeed, breaking news, NFP announced at 57,000, opposed to the number which was anticipated between 110 and 115. And like I say, as we were talking earlier, did indeed, the facts that we started seeing in May of people struggling to find work, highest percentage since 2021, how much of an impact has that had? And what is going to be the next steps the Fed's going to take with that number? Let's say if we think of it beforehand, if we look at it, it's been quite steady, the job market. January 160, February, okay, shocker, 156, but 185, 115, and 172 the previous month. So it's been pretty steady. So this is quite especially the last 3 months, March 185, 115, 172. That's quite a steady number. So clearly, obviously, it has dropped off. Let's have a quick look, though. This is interesting. I didn't think about this. Let's look at the revision. Right. Okay. Now, like I said earlier on, okay, the previous number was 172. That's actually been revised lower now, down to 129. So maybe the job market isn't as solid as people anticipated, as they were thinking. But anyway, don't forget, this is indeed a live show. So by all means, ask me questions, or more interestingly enough, what I really like is when people share with me their own sort of views, their own opinions and stuff like this, Let me know what you think, let me know what you trade. For example, are you a gold trader, currency trader, indice trader? Share with me some of your ideas of what you think and your opinions. Because like I say, we're all here to share our opinions and ideas, of course. So do that. But so that is indeed a very nice move on gold there. Very nice. Yeah, 125 now. Okay, very good. Don't forget, of course, we've got a shortened trading week this week, because obviously it's the bank holiday is happening tomorrow in the United States. So it's going to be a little bit thin on the ground when it comes to liquidity and volatility, because the US is going to be obviously doing hot dogs and fireworks for their 4th of July celebration. So bear that in mind. This is why we're having it NFP today on a Thursday. So is there any questions at all? Anybody like to ask me anything or share an opinion with me? Because I love to hear your opinions. Really would. No? Okie dokie. Not a problem. Not a problem. Anyway, let's go through the shocker. Let's do in a nutshell. So anyway, the breaking news. Breaking news today. NFP announced lower than expected. Comes in at 57,000 new jobs created versus the expectation of between 110 and 115,000. Okay, this is another great question, actually. Yeah, before we go, another good question. Does the earnings report affect this too, as in the average earnings, I assume? Of course it does. Average earnings are incredibly important because we need our average earnings to match the level of inflation. Otherwise, obviously, people are going to struggle for household goods. But like I say, average earnings is this result came in a year on year 3.5 again as anticipated, and month on month 0.3. So, like I say, if we had a shocking number on that, that would definitely make more of an impact today. But again, it's been, it's pretty much as expected. So really, it's all about the NFP. But a great question. Thank you. Any more questions, of course, before I let you good people go? Nope. Okay. No problem. No problem at all. Leaves me to say then, in that case, okay, thank you for coming along and attending this exciting-ish event today. And like I say, the big news, of course, is the NFP did come in lower than expected at 57,000 new jobs versus 110 to 115,000 new jobs expected. Next move, look over to see what the Fed may do next. I have one more question here, I think. Thanks a lot, James. That's a nice comment. Thanks a lot, James. No, thank you. Thank you for coming along and joining me. I appreciate it. I really do. I really do appreciate it. Anywho, before I sign off, remember this one simple thing. Remember. Oh, thanks, James, as well. Hey, thank you. And there's another question here. Do I have any more watch-alongs coming up? I've got a brand new live show I am getting ready to produce with my partner in crime, my video producer. We're working on it. So it's going to be something similar, and we will do watch-alongs as well. But thank you for asking, and thank you for your support. I appreciate it. I really do. Anywho, I thank you everybody. Of course, thank you everybody for coming along and putting up with me and watching the show, which reminds me, of course, if you are indeed, of course, watching me on YouTube and you like this sort of thing, you want to know more, because we do watch-alongs, and like I say, I've got a new live show coming soon, so that will be happening very, very soon. Of course, if you like that sort of thing, by all means, subscribe if you like, hit the notification button, of course, so next time we're going live. And if you've enjoyed this type of content and you sort of put up with me, by all means, give me one of these. It's nice to know that you like what I do. Anyway, till next time, remember, these little shows, these little broadcasts, little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your research, do your due diligence, and of course, know the risks at hand before entering any trade. Till next time, every single one of you, trade safe.